I hope we are all well and truly lit. Yes, we are back with another week in the markets. And boy, I feel like I say this all the time, but are we going to be in for some volatility this week? Because a lot of focus once again is on the dollar. We got the FOMC rate decision and the non-farm payrolls this week. So a real big one in further crafting this dollar trend. You know, we're in the trend to the upside right now because the economy's still running warm. You know, inflation's still sticky. Labor market is tight. Everything is just in favor on a economic level and a monetary policy level for the dollar right now because, you know, given how buoyant the economy is in comparison to its peers, the FOMC needs to remain as it is with rates, interest rates. Okay, there's still the potential. There is still the outside bet that they could even raise rates given the way economy is running right now. Okay, so the dollar is in a strong position versus a number of its peers. Okay, because when you look at other economies, there's signs of slowdown. Inflation's coming down in other economies, right? But then there's some economies where inflation's generally still high, but we're seeing lagging economically, which is a bit of stagflation. Okay, so the US isn't in that position. Generally speaking, things are still buoyant. Okay, let me share my screen and we'll jump into everything this week. Now, if we look at the dollar, on the week, we finished in very minor negative. Okay, you can see, obviously, the trend and structure remains to the upside as we were calling, right? Late 2023, this upside pressure where we were ready for it, weren't we? We were ready because we knew the markets were getting overexcited, overstimulated by pricing in a number of rate cuts for this year. We knew the FOMC were going to push back. We were ready for this. So that's why we've been trending to the upside. And data last week just further confirming that. Okay? When you look here, well, the key thing really last week was inflation, okay? Inflationary points. For example, the GDP price index, as I said, that's the prices of goods and services that are used to measure GDP, that contribute towards the GDP figure. So prices of those goods and services are still high, 3.1%. Decent pending home sales. Unemployment claims, still tight labor market heading into NFP this week. It's inflationary. And then when we look at, to round off the week, the Fed's preferred measurement of inflation, core PCE, okay, 0.3%. It remains elevated. Inflation isn't really cooling. It's still sticky. So higher for longer from the FOMC. Now, bar that weekly closure there, I still feel like we're going to push to the upside. When you look at the daily here, remember, we'll keep an eye on this potential bull flag pattern. And you can see where we're printing higher highs and higher lows, right? And now we're breaking out this period of consolidation. Remember, consolidate, breakout, consolidate, breakout, consolidate. We're getting that breakout now, okay? So we've got legs. We've got room to go and try and tackle this mid 106 towards 107 area. Give us a breakout and retest. Use this as new support and go and extend to the upside in towards 109. Now, fundamentally, what could support the dollar's rise this week and why does Ken still remain bullish dollar? We have the FOMC rate decision. I don't even need to go into this, guys. Everything that I've just said here is why we're going to see a hawkish FOMC, in my opinion. Further pushback. Hawkish commentary from Powell. Okay, so I think that will support the dollar bulls right now and we'll elevate to the north.